Hey, I'm Michael Smith, CEO of Bluefield Realty Group, and today I've got Nathan Robirds from PrimeLending back with us, and this time we're talking about refinancing. So the way that I see it, there are probably four primary reasons why you might consider a refinance on your home mortgage. There are many instances where it could make sense.
Sure.
I think the primary reason, especially right now in this market, is a lower interest rate, right?
That's the most popular right
Yeah.
now, for sure. So I don't know if you've heard, rates have just absolutely tumbled lately. It's in the market everywhere. So that is the number one reason we're getting refinance requests right now.
Yep.
But there are a lot of other reasons that people are refinancing.
Yeah. So, and I actually just refinanced my home. Nathan helped me with that last month, and we were able to drop our rate from 4.5 to 3.5, which
is a great deal.
Made a great deal. Yeah, it made a big impact on our monthly budget. It was phenomenal.
Right.
So the second reason I want to cover is cash out.
Cash out.
Right.
That's probably our second most popular option
Okay.
right now. With the rates being low, a lot of people are determining that they have gained equity in this great market that we've been having here in South Carolina, the upstate lately. So there's been a lot of equity. They have more cash in their house that they're able to grab out. So, you know, some of the primary reasons that people are doing the cash out are debt consolidation, pay off bills to kind of reduce their overall expenses per month for the bills. And then the other thing are home improvements. So, you know, new kitchens, new bathrooms, new roofs, new fences.
If you want to put some money into, you know, renovating and improving the value of your home even further, instead of putting that on a Home Depot credit card, you know, you pull that equity out it's going to be a much less expensive way to do that.
For sure.
Right. And let's say you've got equity in your home and you're able to get, you know, an interest rate on your refi in the high 3s, low 4s, somewhere around there. But you've got all this credit card debt or an auto loan or student loans or something at a much higher interest rate, pulling that money out of the home, paying a low interest rate on it and paying off something that's a high interest rate, even if your mortgage payment goes up a little bit a month, your overall financial picture is likely going to be much better.
Absolutely.
You know, because there goes that $500 a month credit card payment.
That's exactly
Something
right.
like that.
Yes.
So that's another great reason. The third one is what? Shortening term?
Shortening term, that's actually become really popular with rates going down. So a lot, you know, if you're not looking to just absolutely get a lower rate, if you're not absolutely looking to get cash out, what people are doing right now are they're shortening their term. So we've had a lot of requests last week as rates dropped for 20-year mortgages.
Okay.
So, you know, as people are, you know, they may have 2 or 3 years into their current mortgage, but they're able to get a 20-year fix. Payment might go up a little bit, not substantial, but they're saving 7 or 8 years on their loan.
Yeah, that's
So,
great. Definitely something to consider, just depending on your situation.
That's exactly right.
So if the month to month, you know, an extra little bit each month isn't going to make a huge difference, but you end up paying your mortgage off a lot quicker.
Could save you a lot in interest.
Yeah,
payments.
over the long term, could make a ton of sense for you.
Absolutely.
Yeah. And Nathan, what's the fourth reason?
So the other reason that we're seeing, and this is probably the fourth reason, but it is like a program change. So a lot of people that are on FHA paying higher mortgage insurance or did an FHA 2 or 3 years ago with rates in the 5%, you know, that's a situation where we can look at maybe taking you into a conventional type loan, maybe removing mortgage insurance on that loan, something along those lines where we can just cheapen up the payment overall, not just a rate, but maybe get rid of mortgage insurance.
Yeah, and that's actually something I did as well. The first home we ever bought, we used an FHA loan.
Right.
You know, we were able to get in with 3.5% down. Over the next couple of years, values went up quite a bit.
Yeah.
And all of a sudden I had 20% equity. We refied into a conventional loan with no mortgage insurance.
For sure.
And it was great.
Yeah.
So that's definitely something to consider.
Absolutely.
So, all right, guys. Well, thank you so much. Obviously, you know, this is all depending on your specific situation. Don't just take this for what it is.
Right.
You know, we really need to get you connected with Nathan, look into your specific financial situation, see if any of these options would make sense for you. So feel free to call or email us. We'll get you connected with Nathan and he'll take great care of you. At Bluefield Realty Group and at PrimeLending, we all strive to be your guide through the real estate process. We want to help you minimize stress and maximize results. Thanks so much for tuning in, and we'll see you next week.